stock of the day, oil. After OPEC came out, Saudi Arabia will make a deep cut to its output in July on top of a broader OPEC plus deal to limit supply into 2024 as the group seeks to boost flagging oil prices. That means boosting their profits. Saudi's energy ministry said the country's output would drop to 9 million barrels a day in July from 10 in May, the biggest reduction in years. He said, this is a Saudi lollipop. We wanted to ice the cake. We always want to add suspense. We don't want people to try to predict what we do. This market needs stabilisation. He said he'd warned all the short sellers a while ago. But it's not just Saudi Arabia. Iraq is extending its $211,000 barrel a day cut. Russia is going to extend its voluntary production cuts till 2024. OPEC agrees to new production target of 40 million barrels a day. Mathan, so early we don't want to give compliments in the hour. You've been talking about this for a while, haven't you? That OPEC had to move.
Yeah.
Don't be despondent about the falling oil price.
Yeah, look, it's self-interest. That's all I look at. That's the most proven track record, and it's in their self-interest. Yeah. Most of those countries have nothing other than oil revenue to drive their economy, and most of the economy depends on government funding. So they need generally around 90 to make it all balanced for most of them. Some of them actually need it even higher.
Right.
So in that context...
So 90 US barrels is their sweet spot.
Yeah.
$90 US a barrel.
Yeah, I think that's where they... obviously when they cut back on production, that's going to affect them as well. So they probably need it higher than that to make it all add up. So in that context, they can't live with lower oil price. Right. It's going to hurt them. And we're in an environment where high inflation means they need to provide more support for their economy, and they don't have any other way to earn the money.
And they're building this massive city in Saudi Arabia as well. They've got big plans, have they? That billions. I've got a relative who's sort of working on it. It's phenomenal.
It's like an enclosed it's a sci-fi real reality. Vertical city going through. It's freaky. But look, we're in a world where we're doing a lot of things that are out there.
So oil price heading back to 90?
Look, I think it comes down to what happens everywhere else as well. Do we get demand picking up gradually, which is what you would expect? And are we going to have a recession, which means demand comes off? All of these things people are trying to price in. And on the back of that, for these guys, they need to keep, when they say stabilized price, it just means higher price. Yeah. It's like when China says, I'm stabilizing commodities, it means lower price. So it's in their interest. What can they do? Well, they will react, and US has already flagged that they're going to buy back their strategic reserve in July. I just go, if you're doing that, why do you announce it? Seriously, do it after.
So they've run it down, haven't they? They're saying we'll build it up.
So these guys are cutting production. US is going to be buying in July, August. Yeah. So there is going to be a bit of a play in energy coming through. Look, around here, I think that you balance out everything. It should go a bit higher. I think it sits probably around the mid to high 80s. Right. I think that's where, because they'll try and get it higher, but I don't think they can do a lot when you've got slowdown globally playing out as well. So it's going to be a tough cycle. But I think the downside risk is limited because they'll be forced to act.
So Karoon's your favourite one?
It's the dominant oil play. It's the only oil play. It's the only real oil play. There's LNGs. And the LNGs are linked to what's happening in Asian industrial production, which is weak. So I think it'll take a bit of time for that to flow through. We need to see a bit of recovery in that cycle for that to play out. For me, Karoon has exploration upside. It doesn't have the local uncertainty with tax issues as well. They've got their Brazilian tax issues. But they've got a bit of a kicker there, and it's probably the cleanest.
So not for Woodside, Santos, any of that?
Not at the moment. I think it is, I am keeping an eye on the whole play because I think this, again, in some of these resources, I am looking at it, but you are in a recession type cycle. Whether it's a recession or not, it's not what I'm caring about. It's a slowdown. We're seeing that slowdown, and it's going to get more. So they will be affected. And for me, Karoon, because of the clean play on the oil, it reacts much better, so it holds up a lot better.
Gaurav, what's our house view on your view on oil at the moment? Is this sort of the end of falling oil prices and a really soft energy market?
I'm far more skeptical about OPEC as an organization than I think most people. I would put OPEC up there with the IOC and FIFA as an OPEC.
That's a low benchmark. Come on.
That's
I love it.
three of the most useless, corrupt, ineffective organizations in the world.
I can put a correlation there.
Yeah.
Two of them are mainly funded by the third one. So
Yeah. Interesting. But look, I'm not just trying to be flippant. I mean, I genuinely think the impact of OPEC is extraordinarily overemphasized, and that's because when you think about it, do we really believe that even at $70 or at $90 oil prices, are these countries who, as you say, they have nothing else, they have no other means of currency, of generating currency other than exporting oil, are they going to be cutting back on their volumes? I just don't believe any of these targets. None of these targets are verifiable. In the 70s and 80s, Saudi Arabia used to keep excess capacity idle, and they used to keep that as a big rifle to all the other OPEC members, and the threat was always, you will abide by these cuts, otherwise we'll flood the market and we'll make oil $20 and no one will make money except us. Yeah. And that was always the stick that made OPEC work. Yeah. But over the last 20 years, idle capacity in Saudi Arabia has diminished to zero. The stick has gone. There is no way to verify production cuts. If you think impoverished Iran, any OPEC member is cutting back on capacity at 70 or 80 or 90 or any amount of money, you're absolutely dreaming. There is no way that these cuts are real. This is a marketing exercise writ large designed to influence the oil market, and in particular move the oil futures curve. And I don't think it has any more weight other than air. This is air coming out of your mouth and nothing more.
Right, so you think it'll stay soft for a while though?
Of course it's going to stay soft. The market is telling you there's a recession coming. Commodity prices have now crunched retail stocks. There's bombs going off every week, not only in Australia but all over the world.
But we're 5% off highs.
I know.
I think that has more to do with the composition of the market than it does with what's going on.
Actually, some of that is pure tech play.
Yeah.
So the last week's inflow into techs was historical high. We're talking about
Australian techs.
Global techs, US techs.
Yes.
The inflows were almost like 10, 15 years of inflows into 1 week.
Wow.
That is some phenomenal amount of data that's gone through there.
The market is pricing in a recession right now. You can see that from commodity prices. Look at energy, any form of energy, be it coal, LNG. Oil has collapsed 80% from its highs. Energy across the board has fallen because the copper has fallen. Copper, everyone loves copper. You can't find a bear on copper.
It was the new lithium.
It was, which is a clear sign, by the way, to get out of it. So everyone's bullish on all these things, but the market's pricing in a cyclical downturn, and I just don't think we're going to see oil in triple figures while there's all these cyclical problems happening.
I agree. I don't think you're going to get the 100 plus, right? Unless there's a dramatic improvement in the economy, which I don't see happening. And you're right. Gold has outperformed copper and oil.
Yep.
When that happens, you know things are not going great, right? But it's amazing how much the market has hope that you can just cut rates at relatively elevated inflation level.
Yep.
And so it's kind of a balancing act. So for me, I look at this and say, okay, it's a trade as well. So you have to look at what's happening in the tech. If the money is going to come out of these globally, I mean, if you look at our market, it's all in the top 100. The outperformance is all in the 100. If you look at the small caps and the micro caps, they're in recession cycle. They're down 20, 30%. Where the large caps are...
The good ones are down 20 or 30%.
Yeah, I know. So the large caps are basically only down 5%, 10% at best. So if you look at that cycle and say, okay, how is that possible? Well, either we're in a bull market, which means small caps have to shoot the lights out, or we're in a recession, which means large caps cannot hold their earnings, which means they'll fall. So in the risk return, it kind of works that small caps should be a better bet. Similarly, for me, it's kind of come to the concept of, okay, if the market is playing, whether it's recession or not, can we get out of it soft landing, which I doubt. But if it is that, the energy actually plays quite well. Because even if you're not doing construction, if you're not doing anything, the basics of energy and food, you cannot get away. So for me, energy is a good trade here because you're pricing in a fair amount of recovery cycle in the techs If that doesn't play, then energy should benefit.
Right.
If that does play, then energy should catch up because the economy should recover.
Okay.
I think it's even simpler than that. The energy production has lagged energy requirements for the last decade. And it's interesting that the market's pricing in a recession, yet oil is $70, coal is $130,
Yeah.
gas is admittedly quite low. But these sort of levels used to be boom time prices. I mean, oil in recessionary times used to get down to 50, 40, even
minus.
lower. So I think the curve has changed, where there is a structural change in energy prices, and that should bode well when the cycle turns again. So I wouldn't be rushing out. I wouldn't be rushing out to buy energy stocks right now, but I would keep in mind that I think we're in for a period of heightened profitability for all energy producers across the board for a number of years until we can solve this supply problem.
Right. Okay. So don't get too carried away with OPEC.
Yes.
Don't rush into your Woodside.
Don't you get carried away. You can
Sandoz
safely
and-
ignore OPEC. They have nothing to do with oil prices.
All right.